Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we are diving into Willow Capital Corporation's latest proxy statement, and trust me, it is not about happy trees. We are going to unearth the details about their upcoming annual meeting, who they want on the board, how much the directors get paid, and any potential conflicts of interest. Let's jump right in. This document is essentially a notice and invitation to Willow Capital Corporation's annual meeting, where stockholders get to vote on important company matters, mostly the election of directors. So it is like a school election, but with bigger stakes and more money involved. The meeting is scheduled for June 26, 2025. You can attend virtually. They are going to talk about electing a director and other possible business that might come up. It is important for stockholders to vote. Even if you cannot make the meeting, your vote counts. Think of it like voting by mail, but for a company's leadership. This is a definitive proxy statement. This means it is the final version that the company is sending out to get shareholders to vote. It includes all the important information you need to make an informed decision on who should be on the board. If you owned Willow stock on April 11, 2025, you are eligible to vote. That is called the record date. Make sure you use the control number on your proxy card to vote online. The board of directors recommends voting for the election of their director nominee. This is like the school principal endorsing a particular student for class president. Let's talk about how to vote. If you are a stockholder of record on April 11, 2025, you can vote online during the virtual meeting, by phone, or by mailing in your proxy card. If your shares are held by a broker, follow their instructions. Every share gets one vote. If you own shares in multiple accounts, you will get multiple proxy cards. Make sure you vote on each one. You can change your vote at any time before the meeting. Just submit a new proxy or vote virtually at the meeting. This is like changing your mind on election day. Directors are elected by a plurality of votes. This means the nominee with the most votes wins. You can find Willow annual report on their website. It gives you a deeper look into their financial performance. It is not just about who is on the board, but how the company is actually doing. The company pays for soliciting these proxies, so the company foots the bill to get shareholders to vote. If you want to submit a proposal for the next annual meeting, you need to get it in writing to the company secretary between December 1, 2025 and December 31, 2025. Make sure it follows all the rules laid out in their bylaws. The board has nominated Timothy Lower as a Class 1 director. If elected, he will serve until the 2028 annual meeting. Timothy Lower is currently the Chief Executive Officer and President of Willow. He has been with the company since 2022. He is considered an interested director because he is also an officer of the company. The board considers Lower's experience in investment management and his understanding of Willow investment strategy as key qualifications. James Roche is the Chief Credit Officer. Boris Onfader is considered an independent director. Jane Siebels is an independent director with experience in investment management. Todd Centurino is also an independent director with experience in portfolio management. Mark Klingensmith is the Chief Financial Officer. Justin Lee is the Chief Compliance Officer and Secretary. A majority of the board must be independent, meaning they do not have a material relationship with the company. The board has determined that Onfader, Centurino, and Siebels are independent. Lower and Roche are not independent because of their roles within the company. The board has an audit committee and a nominating and corporate governance committee. They held a few meetings during the year. The board oversees risk through its committees and the chief compliance officer. They have to ensure that the company complies with regulations and manages its risk effectively. Let's talk about money. Willow does not have employees. Services are provided by employees of their investment advisor, WT Advisors, and their administrator, WT Partners. These companies get paid for managing Willow business. Here we see how much the directors get paid. Independent directors Onfader received $28,750, Sabels received $25,000, and Centurino received $26,875. Fees earned or padding cash by the company. The interested directors Roche and Lower do not get paid extra for being on the board. Section 16N requires company directors and officers to report their stock ownership to the SEC. All filings were submitted on time except for a few initial ownership reports. Willow has relationships with WT Advisors and WT Partners. These relationships can create conflicts of interest. For example, the way WT Advisors gets paid could incentivize them to make riskier investments. The company pays WT advisors a management fee and an incentive fee. The management fee is a percentage of the company's net assets. The incentive fee is based on investment income and capital gains. So if Willow Tree does well, WT advisors makes more money. This table shows how many shares are owned by the directors and executive officers. Roche and Lower each own 34 shares. The audit committee reviewed the company's financial statements with management and their independent auditor, PricewaterhouseCoopers. Here's how much they paid their accounting firm for different services in 2024. Audit fees, $200,000. Tax fees, $105,053. All other fees, $150,000, $50,000. Tab that amounts to a total bill of $480,053. The board of directors knows of no other business to be presented for action at the 2025 annual meeting of stockholders. So what is the story here? Willow Tree Capital is getting ready for its annual meeting. The key decision is electing Timothy Lower to the board. The filing lays out all the important information, director pay, potential conflicts of interest, and how to vote. Now, my take. Willow Tree is navigating the complexities of being a BDC. The reliance on WT advisors creates a potential conflict, but they seem to have procedures in place to manage it. The director compensation seems reasonable. A potential risk is the incentive structure for WT advisors, which could lead to riskier investments. The company seems well regulated and intends to comply with laws. Thanks for watching Corporate Decoder. If you found this helpful, please like, comment, and subscribe. Let me know what filings you want me to decode next.